Hello, everybody. Welcome to another episode 25 of Forever Slow Stroking the podcast. And this your man, your boy, Eon. You already know me. You know me. Yeah, son. Alright. So, excuse my hype, you know what I'm saying? Let's get to it, though. Today, episode 25. I'ma start a riot. That's what we're gonna call this joint. We're gonna call it I'ma start a riot. You already know me, son. So let's go ahead and get on with it. We're gonna be talking about some cool stuff, some good stuff. This is definitely gonna make you some money if you pay attention to what I'm telling you. You feel me? Alright, so first thing, let's start off by saying I am not a financial advisor. Anything that I say on this episode is for educational and entertainment purposes only. If you need a financial advisor, please seek one. If you can't find one, hit me up, son. I will help you find one. If you need a fiduciary, hit me up. I'm more than willing to help you find one. You know what I'm saying? I got the 2 Chainz playing in the background. I'ma start a riot. And I did that because that's the name of this episode. I'ma start a riot. You feel me? You know me. So, son, also, if you like the content, even if you're new here, like, subscribe, share. Feel free to join Forever Slow Stroking the Investing Group and whatever else. We got some hidden gems for you and all that. Detailed hidden gems too. This is a valid episode 25. I gotta give you something because we've hit a milestone. You feel me? 25 episodes of Forever Slow Stroking. God damn. Anyway, so alright. So let's go on with it. I'm gonna start a riot. Stimulus conversations have resurfaced. They've come back to life. People are back onto the stimulus mindset. We got Pelosi over here telling people, yeah, we really doing it. Something $1 trillion. We about to make this money happen for everybody. You know what I'm saying? Oh, my bad. I just dropped my cord. But, yeah, so this, and this. All this money coming, you know what I'm saying? But a stimulus is really needed. Number one, people don't have jobs. I mean, the job report did come out. More people have jobs than was expected. But at the end of the day, people still don't have jobs because people who were working at like consumer-based companies and like airlines, they're losing jobs. Why? Because there is so much that is missing. There's so much money missing out of these markets specifically, and it's bad. Not so much as just the market, but the industries. Money is missing out of the industries, which makes it hard for people to keep a job. And if you can't keep a job, how you going to have money to take care of yourself and your people? You know what I'm saying? It's going to be hard to stay valid. So that's why they need the stimulus. Now, mind you, along with, you know what I'm saying, stimulus, stuff like that, cases are rising. COVID cases are rising. So we need 2 things. We need a stimulus and we need a shutdown. But I'm not here to talk about a shutdown right now. I'll probably get to that later if you know me. I'll probably talk to you about that later. All right, son. So right now, what we need to talk about right now, son, is the stimulus. So I told you previously in one of the other episodes, probably like 4 or 5 episodes ago, that whenever this stimulus conversation comes up, and if it pulls through, then that means that the U.S. dollar will start to weaken because you're literally placing money into the economy. You're changing up the supply and demand. Now we have high supply with our demand. So before it was low supply, high demand, but now because you're increasing the supply and keeping the demand the same, it's no longer unique. The US dollar loses its strength. I hope you understand that. And if you don't, it's all good. You don't need to know that right now. I'm just telling you that if you want to know. So, now, when that happens, crypto, specifically Bitcoin is what I'm talking about right now, starts to rise. And it has already risen. It has been on a rise pretty much all year, ever since the first stimulus. So, this is nothing new. Now, I did some work, and I actually charted Bitcoin. And so when I charted Bitcoin, I saw that a descending triangle was starting to form. And if you know me, then you know that descending triangles are like kind of like something that I really like. I really love descending triangles, and they're forming. One is forming on a short-term basis for Bitcoin. So Not saying that my prediction is right on point, but based off of my chart, I would say that around December the 16th, I expect Bitcoin to go down towards pretty much 18.7K US dollar. Compared to the US dollar, BTC USD, I expect that to go down towards like $18,700. If you need to know what that is. So 18.7 by December the 16th. Now, as that price, as Bitcoin, whatever it is, gets closer to the apex, which is that day in price. As it gets closer to that apex, it'll break. And my interpretation is that it'll break up because it'll hit a support. Now, this support should be strong enough to push it up. So it'll hit the support and it'll break up, head back towards the $20,000 range. You know what I mean? So that's why I love the triangles, descending triangles, because it shows that there's potential for upside, even when you're looking downward. So that's that. So I think Bitcoin is going to go back towards that 20K range rather quickly. Now, you say, all right, what were you talking about all that? I'm going to start a ride and all that. Son, the reason I mention that is because if you're playing on the stock side, you know me, son. I love stocks more than I love Forex, and more than I love cryptos. I'd rather trade stocks. So on the stock side, there is a ticker called RIOT, RIOT. RIOT is this, I guess you would say, it's almost like an ETF or whatever, and it holds like different cryptos in it. So what you would do is say, if I know Bitcoin is going down a little bit, right, I would start to build my RIOT position. Start to build your position in RIOT. So that way, when Bitcoin breaks and all the other cryptos follow Bitcoin, Ethereum, Litecoin, Dogecoin, Bitcoin, all that, when all those coins start to follow Bitcoin, then RIOT is going to go up. RIOT is going to have a riot. RIOT is going to be on a rampage, son. And that's what you want. You want to be able to play smart. You really want to be smart money. You don't want to be the person that just catches the trend when it's in progress. You want to be the person you want to be valid enough to catch the money before it even happens. You know me, son. You know me. That's what I'm all about. That's what I'm here to educate you all on. Now, that's it. That's what I'm saying. RIOT. You need to check out that RIOT. You know what I'm saying? So that's what you need to be looking at this week as they continue to talk about stimulus. Now, also over the weekend, since it is the weekend, if you're not in the market right now, you say, okay, well, I want to get some positions. So you can't buy stocks over the weekend, but what you can do is you can buy cryptos. If you're on Robinhood, you can buy cryptos. I believe that Weeble's doing crypto as well. So utilize the link that I put in the description of this video or of this audio to sign up for Weeble and Robinhood. And when you sign up, you'll get free stocks. If you do Robinhood, you'll get 1 free share. If you do Weeble, you may get between 2 to 5 free shares. They've been doing promotions for the past 2 weeks, so I know they've been paying. They've been dropping some bread for people, and it's a good look. You know what I'm saying? I've got people that signed up and they said, yes, and I got some money. Hey, free money. You can't beat that. You know what I mean? Anyway, so now let's get into my week. How much or what did I do this week? 12/6/2020, the week of. So I collected some profit off of Ethereum. Did some of that. 30% loss on Alibaba, 8% profit on Apex, 16% profit on APXT. That's when I did the 8%. And then I got 16% from WWR, 30% profit from WWR again, 10% profit from SBE, 120% profit from Home, 105% profit from Chewy, 100% profit from Chewy, 57% profit from Chewy, 40% profit from Nike, 66% loss from SBE, $40 profit from Chewy, 30% loss from Neo, 23% profit from DocuSign, 10% profit from Chewy, 45% loss on Microsoft, 30% loss from Jumia, and then 20% profit on Avis. That's a lot. That was my full pause. That was a lot. So now we got that out of the way. Now I know what y'all really want to hear. I know what y'all came for. The hidden gem. All right, let's get into it. So hidden gem. as you heard, I mentioned this a lot. Chewy. Chewy is my favorite company. That is my favorite company to invest in and trade. And I will say that to you all. That doesn't tell you what to do, but I can tell you that that's my favorite company. So, Chewy is reporting earnings on Tuesday after hours. Tuesday after hours. You're like, all right, son, cool, bet. So, my recommendation. I'm not a financial advisor, so I'm just saying this. Don't try to be like, oh, told me to do it. They say do nothing. I'm just saying, if you want to and you follow me and you trust me, this is an option. So, I would recommend buying on Monday after around 12 noon some Chewy. Whether you're doing contracts or whether you're doing shares, buy some Chewy around 12 o'clock. Then what I would say is on Tuesday in the morning, I would sell some Chewy, and then I would wait for the run up for Chewy in the afternoon and sell the rest of my Chewy. And I would say look at profit taking levels to be between 5% and 35%. So take between 5 and 35% profit. If you get more on a jump up, cool, great. Do not get greedy. That is where you will fall. That's where you will fail every single time. So be happy in your profit. Catch it when you can. Son, that's all I have for y'all. Thank you for tuning in to episode 25. Please like, subscribe, share, comment, whatever it is that you want to do. Hit me up if you're interested in joining Forever Slow Stroking the Investing Group. Hit me up, son. I got you. We're going to get you in there. We're going to get you squared away. We're going to get you making some money and all that, son. So thank you all. And, man, it's, son, I got a slow stroke. Me. Ooh.